Hey viewer, I hope you're doing well. We're still in the seventh month of the year 2024. I go by the name Sarah Yuma, the oral nutritionist. If you've not yet subscribed to my YouTube channel, please do so without fail so that you can support that channel and it can grow in its algorithm. So today I'm here to speak about, I think, three major things. If you're a spouse, do you think you'll have direct access uh, to your other spouse's accounts or funds in case of their demise? Do you think you'll have straight access, direct access to your other spouse's account in case of a demise? I want to talk about something called POD. This is payable on death. It is an option that you can take to avoid costly probate, just in case you want access to your spouse's funds in case of their demise. Uh, it's a simple designation to your account that allows the obvious chosen beneficiary to access your funds after you pass on without probate. I don't know if you understand this thing called probate. Maybe you can Google, all right? uh, let's not wait until time passes and then you start going to the banks and the banks tell you, oh, we are going to freeze your spouse's account, and yet you are the spouse's beneficiary. You will not be able to access those funds directly in case you do not have this thing called POD. This is payable on death. It is free. You can choose it. It's free and it doesn't require any lawyer or advocate's intervention. It's just you picking that option to your account, and you have to pick it before your spouse's demise. Okay, there's if your spouse is investing in stocks and bonds, you can subscribe to something called a TOD, that is a transfer on death, uh, for any non-cash assets that your spouse might be holding. Also, I think this is free also. Please go Google and implement before it's too late. I want to talk about something about the landlord. Are you a landlord by inheritance, or are you a landlord by choice? I don't know which is which for you, my viewer, but you can. There's this thing called rate of tax on rental proceeds. Rate of tax on rental proceeds, especially for residential rental properties. Okay, so you can subscribe to a monthly rental income scheme at a rate of 7.5% of the gross. So here you're not going to deduct any expenses. You're not going to deduct any maybe mortgage interest and watchman salaries or caretaker salaries. You're just going to pay direct 7.5 per month of the rental income that you're receiving. This rate was, I think, 10% before January 2024. You can also subscribe to, or if you want to subscribe to MRI, this is monthly rental income scheme. Your annual income should be less than 15 million. Your annual income should be less than 15 million. Your annual income should be less than 15 million for you to subscribe to this. There's another option called CTI at 30%. This is a 30% annually after deducting the allowable expenses. So I've said earlier here that the allowable expenses are like the caretaker uh, costs, the cost of maintaining the property, maybe mortgage interest, cost of paying the watchman, and any other costs. So if you see that you have very many costs that you're incurring on a property, it's advisable that you subscribe to CTI at 30% per year, because uh, it goes without saying that the amount that will be left for taxation will be very minimal. But if you don't have many expenses, then I'd urge you to subscribe to MRI at 7.5% monthly. So another thing I want to talk about here is family trust funds. How many of you know about family trust funds? A family trust fund is a succession plan. It's also a wealth management tool, because a trust fund is considered to be separate from the owners, from the spouses. Okay, how is a trust beneficial to the spouses? Um, In case you guys have a debt, that a loan that is not being serviced for one reason or the other, the properties in the trust funds cannot be used to offset that loan. They cannot be used to offset that loan. And in case you have a dispute amongst yourself as a spouse, maybe one of you wants a divorce or some sort of that, the property that is in the trust is not subject to matrimonial dispute. All right, it cannot be divided as the property owned by you two. The property in the trust fund is can only be given to the defined beneficiaries. Again, the property in the trust fund uh, incurs less taxes. Sorry, in case you're transferring things to your name, you will notice that you'll pay some capital gain tax, if I'm not wrong. And is it capital? You'll pay some tax on the transference of the property, all right? So, but if it's in a trust fund, when you're transferring that property to you, you are likely not to incur any taxes whatsoever. You're likely to be exempted from many taxes, and that's why I'd urge you, my viewer, to open a family trust fund to avoid all those disputes, to plan your wealth, to manage it, and also to secure it in some sort of way. That's it from me, my viewer. Stay tuned for my next video, and thank you for watching this to the very end.